You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back live on Education Wednesday. Did you miss us? Well, if you listen on demand, didn't really notice much of a difference last week. You got your on-demand show at your regular bat time on your same bat channel. But for those of you listening live, we are back in your ear holes. Again, I am back from my travels. And Dan still holding court there in the options mecca known as Frankfurt. But it's Education Wednesday, time to roll out everyone's favorite educational program. Yep, it's time for Options Boot Camp. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you folks are binging out there these days. A lot going on in the world of options and education for us to get to. You may have noticed at the start of the show, new sponsor on the program. We've heard from a lot of you over the years, like, hey, there aren't many new players in the options game anymore. A lot of the old standbys, like your OXs and your tosses, have been subsumed by larger platforms now, and they're part of big leviathans. There aren't really a lot of new players entering the game. So when that does happen, we do like to shine a spotlight on the newer players in the game. We just had Tasty on the program, obviously, not too long ago. Heck, we launched this show way back in the day with Zecco. They were the first ones to ever really talk about zero commission options. Now it's all the rage, but they were kind of early on that front. We had Sogo kind of targeting the Chinese market. A lot of different players that were newer to the world of options. Again, choice for you folks at the end of the day is what we're all about. We want you folks to have a lot of choices, a lot of options, pun intended, in your options trading. We especially like it when they come to the game with something new, something different in hand. And the idea of a rebate, I will admit, is something new. We have not really seen that before. So it's very intriguing. Check them out if you are so inclined. Remember, if you like what you see, tell them you heard them on the old network. That does go a long way to keeping these shows going for. His show's been running for over a decade, thanks in large part to the support of our sponsors here on the network. So if you like what you hear, let them know. That's an important way to keep this whole circle going at the end of the day. And of course, if you want more content in your lives, there's only one place to go, theoptionsinsider.com/pro, the place to go to learn more. Speaking of letting us know stuff, this week's 5-star review coming in from White Truck. I've seen that name before. He follows us, I think, on a lot of the different social medias, chimes in a lot of our shows. I chimed in this week to say, 5 stars, this is my favorite weekly trading podcast. Thanks. Well, right back at you. Thanks to you for taking the time out there to listen and, of course, throw some love our way. And a man who is deprived of love, which is why he joins us on this show every week, to get said love from you, the listener. He is none other than the black-hatted, and some might say black-hearted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. How go the black hat and the black heart, sir?
Oh, it's going just wonderful, Mark. Just wonderful. I'm an old softie at heart.
Yes. The black-hearted one himself. So let's see if we can cheer you up. A little bit of the old basic training. Here we go.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in. Prepare to learn. Yes, sir.
All right, listeners, let's get to a little bit of the old basic training. And Dan, this week's topic, I have to admit, it's one that's bothered me for a long time. Going all the way back to my early days as a market maker, when we would hear this in the broad financial media or someone would bring up this topic to us, we would just laugh and say, that's absurd. It's apples to tangerines. They are two completely different things. Yet it continues to be perpetuated out there. What am I talking about? I am talking about this old saw, Dan, that options are just a zero-sum game at the end of the day. We hear this bandied about all the time. Oh, for every buyer, there's a seller, and all these other things you see quoted all the time. In just about any article you're going to see about options these days. Kind of drives me crazy. I'll get to all of my thoughts on this in a minute. But Mr. Dan, when you hear this, I'm sure your mentees come to you all the time over there at MTM and regurgitate some form of this to you on a regular basis. They say, hey, options are a zero-sum game at the end of the day. There can't be multiple winners on a trade. Or they say things like, oh, for every buyer, there's a seller and vice versa. When you hear that stuff, what jumps to mind? Do you agree? Do you disagree? Does it outrage you to your core? What do you feel, sir?
Yeah, I mean, I disagree because there is a right answer, and the right answer is that they're not a zero-sum game. But I always try and understand where people are coming from, and I do understand why people say that. So I think that we probably got ourselves a pretty lively conversation ahead of us today.
Seems like we're on the same tip here, sir. So I don't know. Maybe it'll be a short conversation. We agree. Next comment. No debate counterpoint here, sir, for us. We'll see if we can gin it up nonetheless out here. But you're right. That's a good point to see where the opposing viewpoint is coming from. Walk a mile in their shoes, Dan, if you will. You know what? If everyone did that down in Washington, we might have a better country. I don't know. I'm just putting that out there. A little bit of life advice from everyone's favorite show, OBC. But, so I try to do that whenever I hear this statement bandied out, because I agree with you. Options are demonstrably not a zero-sum game, and we will get into that in a second. But when I hear this said, I try to think, okay, where's this person coming from? Why do they think this? And inevitably, the person who's saying this kind of thing, outside of what we talk about in the financial media, the reporters who say they should know better, but when a typical retail trader comes to us, they're usually coming from the world of stocks. And when you say this in the world of stocks, aka the Delta One world, it's a much more straightforward conversation. You're out there buying shares of whatever, Apple, IBM, whatever, pick your poison on, XYZ. Someone has to sell that to you, usually a specialist, could be a customer as well, depending on how the trade is going up. And then what happens going forward is pretty straightforward. Either your buyer is going to win because the stock goes up, or the seller is going to win because the stock goes down. It's a pretty binary thing at the end of the day. And in that case, It really is a zero-sum game. One of you is going to win, one of you is going to lose. Now, fast forward to the world of options. Our game here on the old options boot camp, where we live, where we hang our proverbial hats. In the case of Dan, a very black hat. Now you're talking about a very different game entirely. You're not talking Delta 1 anymore. There obviously is a Delta component. We talk about it all the time here on the show. There is a directional component to options, but there's so much more than that. If you listen to any episode of this show, you know that. There's gamma, there's theta, there's vega, there's beyond that, second order Greeks. There's all sorts of nuances. There's skew, there's term structure, there's spreads, there's everything we've gotten into in a decade plus now on this show. All of that a long way around to saying there's more going on. So I said we used to laugh when we heard this as market makers, and because here's why. A very straightforward example. You come in, you buy, let's say, Apple and Tesla were both at 170 very recently. They've both moved away from it since. Let's say you come in as a customer, you buy a 1 month Apple 170 put. Maybe you pay for $1 in this case. And so now the stock falls out of bed in the interim. It closes in a month at 165. So the liquidity provider obviously sold that put to you. Now that put goes out at $5, customer wins, he makes $4. Oh my goodness, the market maker must have lost. But this is where I get to their two completely different games that are being played here. They are apples to guitars, apples to pickup trucks. They're not the same thing at all. The liquidity provider is obviously putting together a basket of options trades, of which yours is just a very small part. And they don't want anything to do with your delta risk. The second they sell that put to you, what are they doing? What did we do when we were down on the floor? We would sell stock against it. So you might have sold that put for $1, but guess what? We also sold the stock around 170 in this case. So we made money on that stock. We also made money on the Vega, hopefully, a bit of a collapse of that. So it is very possible, depending on how the other side hedges and what they do with it, to have multiple examples. And we see these all the time in the trades we talk about on shows like the Option Block and indeed on our Options Oddities program. There are a legion of scenarios in which both sides of the trade can make money at the exact same time. Not a thing that you really see in the Delta 1 world, which is where I think a lot of this misperception was born. Dan, what do you want to add to that in terms of, the market maker liquidity game and the customer game, and how they're really not playing the same game at all?
This is one of those times, one of those rare times when I have a fundamental disagreement with one of the things that you said.
Awesome. Let's do it. Let's tear it up.
So I would say that in the stock trading world, that it is not a zero-sum game. And as I think about it, it can be a debatable issue, but my perspective is that it's not, because everyone who is holding shares at any given point, say right now, we're both holding shares in XYZ, and XYZ just puts out a press release that says, we just cured cancer, then me and you both make money. Value is created in the stock market. And I would say that makes it not a zero-sum game.
So you're saying the person who's short in that example wins as well when the biotech explodes 10x?
Well, they're not short because stock is created. I mean, the only person who we could possibly argue is shorted is the company that issued the shares. Like, those shares exist. They're like, they used to be physical things, pieces of paper, but for all intents and purposes, they're kind of physical things. Like, they are things that exist. They are a stake of ownership. Whereas with options, the reason why people erroneously say they're a zero-sum game is because it is a contract between two people, a buyer or a seller, that is created between the two parties. And if you just look at it under that microscope, one wins, one loses, which is not really, you got to look at a bigger picture than just that microscope. But when shares are issued by a company, if the company, creates earnings, the company itself is worth more and those shares are worth more. That's the way I look at it.
I don't want to belabor the stock thing too much because it is an option show anyway. I just kind of want to clarify, I think, what you're getting at for our listeners who may be confused. You're saying a biotech in this example is going to cure cancer. The stock inevitably goes up conservatively 10x. As a result of that, you're saying they're inevitably going to issue more shares and increase their float, and that's why it's not a zero-sum game?
No. And yeah, the only reason that I'm having this conversation is because it leads to the way I look at the options part of this conversation. So they don't issue more shares, but like, okay, so like, let's say a company issues 1,000 shares at $100. So, okay, it's IPO day. They issue the shares at $100, 1,000 of them. So the company is worth $100,000. Presuming that there's no Class A shares or, nobody else owns it, like it's only common stock owned. So the company itself is worth $100,000, 1,000 shares at $100. But if the company makes money, or has some news that leads to investors believing that they will make money in the future, then the company itself becomes, the share prices, the existing 1,000 share prices become worth more. And if, let's just say nobody, 100 people all bought them on, 10 shares on day one, and they never sold them to anybody, they all made money. Value was created or increased in this case. And so, I think that that's important because the reason why options are not a zero-sum game is because if you just look at the options, they are, but it's the addition of stock to the equation that makes them not a zero-sum game. Because the market makers are going to hedge with the underlying stock. And so the retail trader who sold a covered call versus the market maker who's trading basically a synthetic straddle on that covered call, on the call portion of that covered call, they can both make money because it's options and stock. I don't know. That's the way I look at it. And, like as I'm thinking about it, I could see some holes to be poked in what I'm saying there, and it could be a really interesting discussion. I don't know how long you want to have.
I'm poking, baby. No, but this is actually fascinating. I did not think we'd be dovetailing into the stock side. It sounds like we agree on the option side. They're not zero-sum game. There's not a lot of debate to be had there. For the reasons we just laid out, listeners, the other side of the trade can do a legion of things to hedge or exacerbate or leverage their trade, which could change the outcome entirely from just when they bought the contract. And also, let me just quickly say that whole notion of, there's a buyer for every seller and a seller for every buyer. Technically, that is true because there is a liquidity provider there, but options are listed and cleared and settled centrally. So you have a liquidity provider on their side. So they didn't wake up that morning and say, I really want to sell that Apple 170 put to you for $1. That's just the market they're making. You came and decided to take it, AKA Dan's whole business, market taking. And so it's their job to figure out what to do with that. Now, that's where the hedging and everything else comes in. The baskets they put together to try to spread their risk out. So the notion that, because you bought an option, somebody definitely wanted to sell it to you and they have the opposite economic intent. Not at all the case. Whereas it usually is with stock, which is why I want to go back to that for a second. As I get so excited, I hit my microphone here from Dan. I want to kind of clarify again what you're getting to on the stock side because it's intriguing to me. You're looking at it from the issuer perspective. You're saying the biotech company who sells shares in an IPO and then goes on to cure cancer and increases their value tenfold, they still win because their net value of their company is going up. Is that the argument you're making?
No, like who owns the company? The shareholders. So like the value, I would say that the value of a company is the number of outstanding shares times the stock price. Like, to me, that is the value of a company. And so if the value of the shares go up, like, does the value of the company make increase in value? Well, yeah, in that regard, yes. Who is the person who is the person or entity actually making money? It's the owners, the shareholders. Like look at it. Like, let's say it's there's one shareholder. A company issues 1,000 shares at $100 to, just one person. Well, two people. One is the chairman, CEO, and one is just some random guy. And they never sell their shares. If the perception is that the company will make money in the future, the company, the value of the shares will go up. Like, they don't have to change hands in order for them to go up. Because, like, you see that between Friday afternoon when the market closes for the weekend and Sunday night when it reopens for the week, like, a stock can gap and not trade at certain prices. That means that the value of the company changed because the stock price changed, but the number of shares didn't change. Does that make, I don't know. What do you think about that?
I wonder if we're getting a little bit too into the weeds. Let me dial it back a little bit to kind of the brass tacks point I was making at the start of the show, which I never thought would enkindle this whole other conversation, which is fascinating and always fun to see the directions that this show goes. That's why we bring the black-headed one on, listeners. Sometimes he wakes up and gets all fiery, which is always fun. But, let's go back to like a basic example, like I was talking, like the Apple 170 again. Let's say it's orders are hanging out in an old like NASDAQ limit book, so you got customer to customer. So you have someone coming out, posting an order to sell Apple at 170. They're going short. They're selling short. They're not getting rid of shares they already have. But let's say they're getting short. They're opening a position to get short. Customer comes in. They love Apple. They want to buy Apple at 170. Now they make that trade customer to customer here. So it's not even the specialist argument in between on this Delta One type product. And now Apple increases tenfold over whatever period you want to say. Let's say they rocket up over the next year. They become the next NVIDIA. Market can't get enough of them. They're dominating AI. And now that stock goes from 170 to 1,700. In your scenario, Dan, the short seller there can also still win?
There wasn't a short seller in my scenario.
The one I started off the show with. I was saying like customer to customer, someone's selling short, someone's buying it. And so they're both opening positions. This is kind of the purest example of the Delta One's kind of zero-sum game trade. In that scenario, I don't see a way where they could win in you, unless I'm missing some nuance of your 10x scenario, sir.
No. That's right. In that scenario, what the short seller, if stock goes up, short seller loses by the same amount. The long wins, but I mean, there are some stocks where there's no short interest.
You know what, Dan? We might have to put this out to the audience as our ultimate arbiters of all things. I think the options one is more central to us, but we can always maybe make a fun bonus one. Tell you what, producers, let's do that. Let's post full question of the week, which will be our options. A zero-sum game, yes or no, very straightforward. Let's have it run the rest of the week. But also, as a bonus, a big middle finger to Dan. Let's also post a fun flash poll to coincide with it. A couple hours, let's say. We'll get a sense of it by the time we're done, hopefully. And that one will be, very simply, are stocks a zero-sum game, yes or no? Two very basic questions. One runs the full week, and one just to get the pulse of the audience. And then we'll let the ultimate arbiters decide, Dan. You listeners at home, what do you think? Do you agree with us that options are not a zero-sum game? I mean, I plan to spend most of the time on that. But, we got derailed by Dan's 10x pharmaceutical name stock trade thing. Also, what are your thoughts on stock? Who knew that the Delta One would be the most contentious of the bunch? Dan, we could keep going on that. I kind of want to hear what the listeners have to say first, too. And also, we have a surprise for you, so let's get to it. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, welcome to the mail call. And Dan, you know what I'm going to ask you next. But what's one of the things you've been asking me for for forever on this show. Why can't I get this? Why can't I get this? What is that, sir?
Well, let me see. Oh, is it, I don't know. What is it?
You're going to find out right now, listeners, because it's time for the Market Taker Question of the Week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
Bam! You almost talked over it.
Wow.
You're in the danger zone, baby. I don't know. We're still workshopping the music. I don't know. If you want to send in one of your Dan specials, we could certainly use that as music. I don't know if you're quite cool enough for a danger zone. That's what our editors went with. It's also going to get us flagged on every platform under the planet, but it's worth it for one shot for you. Just because we like you, Mr. Dan. You are in the danger zone. You're just that cool. Throw the aviators on. What you got for us this week, sir?
Wow, that is pretty cool, man. I like it. Yeah. All right. Okay. So, question of the week, and I'm going to throw this one out there because it is a very timely one, and it's important to talk about it literally today. Do we have any tickets left for the Smart Trade Summit that we're having in person in Sonoma in June? And the answer is yes, we have tickets left. They went up to full price. However, I got talked into by our marketer, Bobby. Well, I say marketer, he's like the man behind the curtain. He's the brains of the operation. But I got talked into doing a tax day special. And so when you go to markettaker.com/summit and you type in the coupon code tax day, you get just a massive discount, and you get to attend the summit, and you get a bunch of bonuses, and it's really great.
That sounds like heading to the danger zone to me, sir. I wonder what music we'll have for you next week. I don't even know. Maybe it'll be a round robin of different tunage. Who knows? Staying one step ahead of the law, one step ahead of the copyright police. We'll find out over here. Maybe you have your own suggestions. What music should Dan have for his Market Taker question? We were trying to get some crazy clown music. Couldn't get it together at the last minute. We'll see if we can make that happen for next week, listeners. Send in your suggestions.
Maybe somebody can write a song for it.
Oh, there you go. I know, Dan, you got some songs in your back pocket. Maybe some blistering guitar solos. If you got one you want to associate it with it, send it over. We could see about working that in as we keep on rolling. We had a lot of questions we had on our last episode we have to pay off right now, listeners. We asked you this time on our last episode, which was now 2 weeks ago, crazy that we recorded it. We said, how are you approaching SPX or SPY in your portfolio right now? We gave you 4 choices: straight long, ride or die, long but hedge with the put, long call or stock sub, or you're just completely out sitting in cash. And most of you, 36.7% of you, went that route. I'm out sitting in cash. You've got no love for this market right now, which I guess, given today's sell-off post-inflation number, may not be the worst thing. And then we have 31.7% say you're long, but you got to put in your back pocket. We can't fault you for that one at all. 25% saying you're straight long, ride or die, baby. And 6.7% only saying you're long, call, stock sub. Rinsura 1 was so excited about out of the money calls, he had to write in a separate thing just saying that we appreciate that, but it's also one of our selections. You could just choose that as well there, sure, as many people did. But actually not as many as I thought. Only 6.7% went long call. Dan, does that surprise you that over a third of our audience says they're out, they're done right now?
It does not surprise me. And I fall into that category too. I'm mostly in cash. And you know what, man? This would be interesting. I'm in like a just a nerd like mood today, like just philosophically thinking about stuff. But I wonder if we did a study and looked back on every time you ask questions like this to our audience, what the correlation to them predicting the market would be. Because it seems like, and you know, this is very hard because like you have like the recency bias and you know, that kind of thing. It seems like maybe they're good at predicting the market, like because we have smart listeners. You don't listen to a show like this unless you like want to learn. So, man, I wonder I wonder if maybe we have a little indicator here.
We have done that, and never let it be said that I besmirch our listeners, because you're right, they are very smart, and dare I say it, an attractive bunch as well. But they also tend to be a little bearish, Dan. So they've been fading this rally for the past 4 years. Almost every time we ask something that has some choice of I'm out or I'm in cash, they almost inevitably flock to that. So if you just look at our polls, they've been kind of short this rally for a while. So maybe not the best indicator there. Otherwise, though, a very savvy bunch. Speaking of a savvy bunch, right now, Dan, 60%, wow, more contentious than I thought on the option side. Our options a zero-sum game. No, it was 70%, just ticked to 60%. It's 60-40 now. So 40% of our audience thinks options are a zero-sum game, which is surprising. And then, but there's smart folks, Dan, 100% of them agree with me that stocks are a zero-sum game. So by way of a comparison, a big middle finger to you and your 10x biotech point. What say you to that, sir?
Well, I take back what I said about our audience being smart. If they're agreeing with you, come on.
Clearly, very smart, discerning, and dare I say it again, very attractive people out there in our audience out there that just obviously, clearly can be seen by their voting prowess. We also asked you folks on our last show as well, Q1 drawing to a close. Which market segment are you most excited about for the rest of the year? Equities, crypto, vol, or other? A bunch of you wrote in for other, most of you choosing it as a treasury or fixed income surrogate. Again, 6.7%, that's a magic number for other we're getting these days. But the winner was 43.3%, a clear winner for volatility. A lot of you are psyched for vol. I guess right now that's a winner, especially if you're going vol upside. That's been a winner the last few sessions. Crypto coming in number 2, 30%. Only 20%, Dan. Only 20% excited about equities. I guess that dovetails well with our last poll, where they also said they were out of the market. So I guess it makes sense that almost half would be more excited about vol and about a third would be more excited by crypto than equities, sir.
Yeah, I guess that does make sense, huh? I mean, if you're bearish, you're probably a vol player.
It does as well. And Dan, unless you feel like you're abandoned by our audience, they throw me some umbrage as well. Let's go here to BTC Maximal. He's one of our longtime listeners, I believe. I think Neo has changed his name a few times. He says, surprised that Mark Longo doesn't see the obvious reason SPX 0 days have taken over SPX options. The reason is implied vol. Sellers and buyers can use implied vol as their guide to support their assumptions, and there is no overnight risk. Easy for me to say. The institutions are right to love 0 days. He says institutions gamble with SPX 0 days because they have an implied vol edge to support their assumptions, and there is no overnight risk, which makes rolling to reduce the risk moot. He also says he loves SPX 0 day. I believe this stands for one standard deviation iron condor, $5 wide. He loves those. So there you go. Oh, and he does make it up to me. He says, loved the show. Great shows from Boca, Mark. Well, thank you. Thank you for liking those. They were fun. We chatted with the folks from SIBO. All the things you ask us about all the time, listeners, about 0 day, about 1 day VIX, about what's going on with the Bitcoin options on the ETFs. I put it all to the folks over there at SIBO. Let them tackle your questions for a change. So if you want to see what they had to say about all that stuff, check out that. That's on the network now. You can find that over there as well. I never said I don't see the reason. I have said I'm surprised that so many, because clearly 50% of SPX volume, that is not just retail mom and pop 5 lots and 10 lots. That is clearly large funds have found a use case for this. That does surprise me. I will admit to that, because so many large funds, I mean, I've been in this game for a while. I've talked to a lot of pension funds and vol arb funds and others that are out there hedging big vol books. None of them even played really in front month. They were all 6 months a year out hedging these crazy vol books. They weren't even playing in the front month, let alone the front week or front day. So the notion that now so much of this paper has migrated to the exact day of expiration. Also, the fact that I was an SPX market maker for a while, and we all just avoided expiration day like the plague. We tried to roll and close things out ahead of time so we didn't have to deal with all the myriad exploding risks that happen on expiration day that don't happen any other day. And yet so many large funds are clearly flocking toward it now. That does surprise me. It could very well be that you are right. It could be that is the use case. They like the fact that there's no overnight risk. They do it, it's done, it wins or it loses, they move on to the next thing. It's just surprising to me that so many of them have shifted their focus so extremely and so quickly. Dan, what are your thoughts there on why you think so many large institutions have flocked to the 0-day game, sir, in SPX?
Well, I don't have a great answer for it, but I mean, I think it has to do with, there's not overnight risk. I mean, I think what it comes down to is just the advantages that options have when there's 0 days to expiration. If you're a premium seller, you're just getting that maximum theta. If you're looking for premium buying, you get the cheapest options that you can. I mean, arguably, they're high because of the theta. But I learned recently that a lot of the volume that 0 day volume is closing volume. Like an institution puts on the trade 5 days before expiration, and then they got to close it on expiration day. So I don't know. I'm just running my mouth, I guess. I don't know.
You had that funky juice before the show again, didn't you, sir? I warned you about that. Stay away from the black bottle right before showtime. Who's hitting the bottle right now, Dan, might be our audience. They've now moved to 50-50 if options are a zero-sum game. Did none of them listen to the show we just did?
Yeah, that's weird, man.
Wow, that surprises me. We might have to revisit this topic. That one seemed the far clearer. Well, I thought the stock one was a clear one. Apparently not. But unless our audience, Dan, 100% of them still agreeing with me that stocks are clearly and demonstrably a zero-sum game. Options, clearly there's room for work.
I'll tell you what, Mark. I being a big nerd, I've been listening to like some history podcasts, and it seems to me that there's really only one way to solve this answer and to come to the true answer.
Pistols at dawn?
Yeah, single combat warrior.
I'm more of a sword guy myself, so if you want to do sabers at dawn, I'd be down for it. Maybe a little epee or foil. But we can go pistols too if you really like. I like to get close with my opponent, though.
Yes.
You haven't lived till you had the blood splash all over you. You don't get that with the pistols. Too far away. There we go. So, listeners, we'll let you know when we settle it. Sabers at dawn. Dan and I, you guys clearly have already settled it for us on the stock side. I am surprised the options one is as fluid as it is. But we'll see. We'll have the results for you, listeners, on next week's episode. It sounds like we might have to revisit this topic, and not for the reasons that I thought. So. Intriguing. If you're voting yes, options if you're voting yes, options are a zero-sum game. I would love to hear why. What is your reasoning behind? And don't just give me for every buyer there's a seller, because as we just pointed out, that is technically true, but practically, for all intents and purposes, it is a meaningless thing. But we'll get into that more once we have the results. But Mr. Dan, a fun episode, a surprisingly contentious one, and not at all for the reasons I thought. Which is fun, which is why you have to tune in every week. So before Dan goes and hits the rest of that black bottle, if folks want to read, maybe they want to debate this very topic with you. Maybe they want to talk stock zero-sum game, Dan. Where should they go? What should they do?
Well, I'll tell you what you should do is you should join us in Sonoma. Seriously, the Stack Day special is great. So go to markettaker.com/summit. I think the coupon code is up and running. Try it. If it doesn't work, just email me, dan@markettaker.com, and we'll make sure that you get in and you get a awesome price on your ticket.
Well, since you were so kind to offer me that sweet VIP package complete with the wine tour, and you even brought back the Concorde for me just to fly to Napa, maybe we'll do a fun point-counterpoint at your event, Dan, debating this topic. What do you think? Options, are they a zero-sum game, yes or no? And we'll throw stocks in there, too, just for fun.
The VIP ticket, the vaguely invited person? Yeah.
Yes, that is exactly what it said on the ticket. Vaguely, vague is not no. I could still be there. You don't know. You don't know if I'm going to be there showing up, leading your listeners and your mentees down the dark path of stocks being a zero-sum game out there. Crazy stuff out there. Of course, we all know, listeners. Stocks, they are a zero-sum game. And 100% of you agree with me because you are geniuses. I'm more confused and concerned about you on the options side, 50-50 right now. Again, that's going to change. We'll get the final results on our episode next week. If you want more fun on the options side, you got more questions, stay tuned if you're hanging out in the Pro. We'll be back in about 15 minutes for another great Pro Q&A session. I'll be joined by our buddy, Mr. Rich Excel. Does a lot on the futures options side. He's also got all sorts of funky spreads he's putting on all the time, and interesting analysis he's doing of a variety of markets that he uses options to trade. So you folks can really come at him with all sorts of fun questions. FX, equities, ags, vol, you name it. He can tackle all your questions. So get over there, theoptionsinsider.com/pro. I know we've already received a bunch of questions. But if you're listening after the fact, it will be too late. But you can, of course, get access to that after the fact. All of our Pro Q&A sessions go up on that Pro podcast feed after the fact, along with all of our options oddities. So you can't send in any questions for it, but you can listen to it. And, of course, you can participate in all the fun new ones, as well as, of course, win fabulous prizes like our listener did last week. I think it was Kyle who won the March Pro Trading Crate. Get your name in the hat, theoptionsinsider.com/pro. Back again in a few minutes for our next Pro Q&A session, exclusively for our Pro folks. Back again tomorrow for our doubleheader of the option block and This Week in Futures options. Back again on Friday for volatility views, as well as for our Pro folks coming back for options oddities. Then we kick off another new week with the option block. And then we come on back all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Check out public.com if you want to literally earn money to place options trades. There are no commissions or per contract fees. And Public gives you a rebate of up to 18 cents per contract traded. Discover why NerdWallet recently gave options trading on Public 5 out of 5 stars. And start paying less than $0 to trade options. Only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures and podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.